you had missed that one, eventually you had right here another bearish engulfing. So the first bearish engulfing is a one candle bearish engulfing where you have, right? You got one candle that engulfed the previous candle, just like so. All right. Now, the second one, the second entry that we had, right, is where you have this as the last bullish candle, but it took three selling candles, right? It took three selling candles to engulf the previous bullish candle, right? And then you would enter like so, just like here, and then stop loss at the last high. And as you can see, market consolidated and then eventually, boom. Okay. Again, it's like I said, it's just rinse and repeat, rinse and repeat, rinse and repeat. Okay. So we don't want to stress ourselves out. Our job is just to simply read and react to what the market gives us. Okay. So that's pretty much how you would take these sales if you wanted to continue down. And that's exactly where you place your stop loss. Right. So remember, we place our stop loss at the previous high. Why? Because if the market was to go to this high itself, it will give you either a trend reversal or another whole setup itself. It's so far away, it is less likely to go to that area. All right. Please understand, market fell so much, it won't just randomly go all the way back. Right? Because if it goes all the way back, again, it will give you a trend reversal. All right. So that right there is gold, right? From the top, from a daily, and then dropping down to the 4 hour and just waiting for the proper setup for the continuation itself. Okay. All right. So let's lock this in. I mean, locked out. So let's go ahead and look at another pair. Let's look at the GU. Yeah, next. Okay. So we're going to look at the GBP USD. Come on, buddy. All right. GBP USD, like so. All right. So we're going to, of course, as always, we always want to start with our daily time frame. Oh, perfect. Right. We already have a zone mark, as you can see. Let's collapse this because we don't need that. Right. And it's like so. Right. You see, we have daily zone, right? From structure high to the next, we have a double top. You see high market close above it, or it broke the top part of the zone. Yes, it broke above, but the setup is still valid, right? It still have validation until otherwise. Meaning, if market would turn around and give us a bullish engulfing to continue up, then of the day, then we will know it's a continuation up. But we know this is a daily double top because we understand that's one of the variations when it comes to double top setups. Again, right? Mastering the bearish force give you all 6 to 7 different variation of how it would look like. So basically, this is how this one looks like, right? That's the first top. And then the second one, market went a little bit above it, like so. All right. That's just a different variations of it. Understanding the different variation will help keep you in line. The zone is simply based off the daily, and all we have to do is just go to the 4-hour time frame to execute or pull or trigger. So we have the zone mark. So what we're going to do is we're going to drop down to the 4-hour. Okay. Now here we are. Let's collapse it. We could collapse it real quick. Even though it's far away, hopefully you can see it. See that? That's how it looks. Okay. It went above it. Yeah. It bounced off, right? Now let's go ahead and continue with this section itself because we know we at a daily zone, a daily setup. We understand it went a little bit above it, and we are just simply waiting for a sell setup itself, meaning our selling price action so we could take our sell. Now we're going to focus in this little section here itself, right? That way we understand exactly what market did. Okay, here it is. We want to understand exactly what the market did before it fell, right? So this is how it went above, it closed above it, right? We had a one candle. So again, we could do the same thing like we did last time. Okay. Do the same thing like we did last time. Let's just say like right now, this is 9 a.m. Okay. Because this right here will be 1 p.m. Okay. And this right here will be 5 p.m. And this candle right here will be 9 p.m. So at 9 p.m., you would have had your bearish engulfing, right? Now, this is what it is your price action right here, okay? Because this candle in the middle is a bullish candle, right? So this is a one candle bearish engulfing, right? So when we take our sell base, again, we're taking the sell based off the daily setup itself, right? So we would pull the trigger right here, right? 9 p.m. And then we put a stop loss above that, like so. So again, because we don't have a previous structure high, I like to place my stop loss at least 5 to 10 pips above the wicks. Why? Because markets sometimes give us a stop hunt. Okay. Now stretch this a little bit down because remember the setup is based off the higher time frame, and then we're gonna go to the daily. After we take that trade, we go to the daily to see the overall trend that we could place a proper take profit, right? So let's go ahead and go to our daily. Okay. Let's bring this in real quick. Boom. We're gonna like go ahead and minimize it, collapse a little bit. Okay. So this is the setup. You see how it looks? Clean. I mean, it is beautiful. So we're gonna have to look at structures, right? But the structures we're gonna be looking at is the structures to the left, right? So let's go ahead and mark them real quick. The reason we're marking the structures to the left, we want to understand our target TP. So meaning this one right here is our first one. And then this right here will be our second, excuse me, and got a third here. And then of course, within this is our fourth. Okay. So right off the bat, first TP smash. Okay. And then eventually the second one would have got hit, and then so on and so forth. Now, what we're going to do is, right, we're going to look at the structure that the market gives us, especially based off the daily, right? When it fell, it went bullish, right? It broke that and it came back to retest. Now, the reason why it bounced, it bounced off this structure point, right? It's a daily retest to buy up, but it's retesting this point. Now, what we're going to do is, right, we're going to look at this section here, and then we're going to try to identify the sell to continue back down because we already know we in a fallen market based off the setup. Now, there's absolutely nothing wrong with taking this buy right here because it is what it is. We're going to stick with the market, right? Being one with the market. Now, it did come to this area here. We're going to identify it also. We're going to look at it because that's where our TP, our first target TP was, right? So let's go ahead and throw a zone, right? So again, we are identifying the last bullish candle and we are matching it with this right here. Okay. Now, again, I like to use the horizontal line. Why? Because, when you go drop down to the 4-hour time frame, it doesn't look too big of a zone itself. It's just two lines, and I understand between those lines, that's where my zone is. Okay, so let's collapse this real quick. Okay, I don't know what this is. Okay, look. Wait, did I move that? Hopefully I did not. I think I did. Give me a second. Let's go back to the daily real quick. That happens when you don't lock it in. Got to lock in, right? So let's do this one more time. Zone here. Okay, boom, like so. Boom. Let's go ahead and lock that in. That way, when we go to a 4-hour, we don't move that by accident. Okay, here it is. Okay, you see that? Like I was telling you before, right? It's really close to it, right? And then see right here is our turnaround point. Remember when we said we put a TP at a turnaround point? TP would have been smashed already. Okay. Now, please understand what happened here because we're looking for retest so we could take a sell. Because remember, the overall time frame, we are in a selling trend. We don't use the 4-hour to do a trend reversal. We look for the higher time frame, which is the daily, weekly, or monthly for that trend reversal so we could read and react accordingly. So the overall picture is a sale. All right. So our first TP would have got smashed, and that's exactly how it would look like. Now, if you are somebody that choose to stick with the 4-hour to see how structure move, again, there's absolutely nothing wrong with that. So I'll show you exactly how that would look like. Now, we sticking with the 4-hour, understanding what the daily is giving us. So we understand that, hey, we are in a bearish market. Let's go ahead and remove this real quick. This is why I like to use the 2 line. We'll remove this real quick because it had to bounce off that before it continue with the sell, right? So look, So we took our original sell, TP got smashed. Now we know this right here is a bullish candle, so that is a turnaround point. So if we look at the line chart, you see that? So it went up and then it came back. So what we're looking at is structure for break and retest, meaning we're gonna wait for the market to give us a pullback and then to go the pullback will to go up and then to come back down. Now, if you want to use a fib, by all means, all right. If I were to place a fib from structure high, where are we, buddy? Right? Nope, right here. If I were to place a fib from structure high, all right, to low, the low would be down here. Okay. I'm gonna stretch it across, right? Sorry, the structure. This is the previous structure high. I'm sorry. All right, cool. This is a structure high to the low point. You see how market come to our 50 fib level, and guess what? Our 50 fib level is always going to be at a what? Is zone point. It's also going to always be at a turnaround point. So here is where we're looking for a bearish engulfing. Again, understanding what the bearish engulfing look like and the characteristics of this bearish engulfing will set you free, right? Now, look, we have this bearish engulfing right here, which is extremely big, but don't be afraid. That's just what it is. So our entry would be exactly there, okay? And our stop loss will be placed at the high. And the high that we have, right? Because this fell to this point, our last high is up here. That's the wick of this, okay? Now, let me just drag this up real quick. And then this is how much it sold for us, okay? Now, of course, we always look to the left, right? We look to our left to understand the structure that the market give us, that we understand where our target TP would be. Now, you see there's a zone, be able to see it. You see there's a zone here and there's a zone here. What do I mean by that? If you use the line chart, it shows you the exact turnaround points, right? So look, even if I put the candles on, I'm going to use a horizontal line, make the process a lot easier. See how I drag this line? This is the first turnaround point, and then this is the second one. You see that right here? So remember, you always want to use the exact turnaround point to be your TP. So leave that alone real quick. Let's tap this, and then your take profit. Come on, buddy. All right, your take profit will be exactly at the turnaround point. You see that? Easy money. All right, it's like the easiest setup you will ever be able to get. Now, I know the stop loss look huge, but it's not huge. The reason why it's not huge, that stop loss is where it needs to be. Not just that. That stop loss could be $50, it could be $20, and it could be $200, it could be $500. As long as you understand, hey, I have X amount of my account, and my 3%, my 1%, my 2% that I'm willing to risk is $50 or $200. This stop loss have to equals that $50 or that $200. Just drop the lot size or increase the lot size accordingly. That way it equals just that, if not less. That's all it is. All right. Even if you have to take a 50-cent trade, it is what it is. You just acting on your best interest. Okay. All right. So that's how you would go ahead and take the next one, right? Not only just that, right? Once markets stop at this area, TP already got hit. We're not looking for a buy because we understand we are in a downtrend. Okay. All right. So we're just going to wait for the next retest point. So market bounce off here, right? Let's go ahead and delete this fib and delete this entry also. Okay. Now we know market went to this point. So we know this right here. We know this right here was our previous low. Okay. So it broke right here. Okay. Let's lock that in. All right. We know this is the lowest it went. Okay. This is the previous structure it broke. So we're just looking for a retest point. Okay. A retest point, if we place a fib from structure high to low, it has to be up there. Why up there? Because that's where the next structure point is. Okay. Now, remember when I talk about double top setups, remember double top setup falls hand in hand with break and retest. Now, let's do a slight little annotation real quick. That way you understand what I mean. When you get a downtrend that's giving you lower lows and lower highs, right? When it breaks structure, sometimes it goes back up, right? To match this specific area. Guess what you have? It's not just a break, right? It's not just a break to retest point. It also end up being a double top setup itself, right? Off this double top, you look to take the sell to go match its previous low or give you a new lower low. In the case of this, that's exactly what we have. So we know it stopped at a zone, right? That's where we got to target OTP, right? And this is where we would have liked it to stop at. What we like is irrelevant, right? This is where we would have liked it to stop at, right? Now, this, let's go ahead and put our zone, of course. That way we understand how it's supposed to be. That's the bottom zone. There goes a top zone. Again, I'm identifying the last bullish, matching it with the wick high, right? This is how it would be, like so. Let's go ahead and lock that in. So please understand these. What I'm helping you understand is when it's okay to trade one pair and how you could stay consistent with it. Now, please understand, you could still be on that same daily sell hanging on, right? And again, close that TP and just wait for the next pullback because you understand the overall higher time frame is selling until otherwise, right? Now look, market fell, came back to give you the same double top, right? So again, out of break and retest, right? Double top where the second high is somewhat a bit lower, but you see how it went closer to the zone. Let's just say hypothetically, you took this one right here instead, because because you seeing this, you took this right here as a bearish engulfing. It would be right there. This would be a bearish engulfing where it took 3 candles to engulf the last bullish candle. Again, you got to look at previous high, which is up here for your stop loss. Okay. Now I'm identifying every single setup for what it is. I'm showing you every single opportunity. I'm not saying, oh yeah, that's where I would have. That's where I would have. I'm just showing you exactly how it is. So when you do get that setup, you take it for what it is. Look, we got a bearish engulfing. Yes, it got within range, right? Let's minimize this real quick. I want you to see that. Okay. See where my stop loss is, right? Did the market goes my way? Yeah, it goes my way. This is how much it went, right? But again, guess what? I didn't lose that trade. Remember, my stop loss is at the last high. If I'm targeting this right here, turnaround point, of course, look, even though market went back up, you where my stop loss is at the last high, right? It didn't go all the way up to wick me out. And then eventually it went my way. And then boom, right here, TP smash, right? We got a nice little double bottom in the 4-hour. We're not buying that setup. Okay. We're not taking no double bottom in the 4-hour because we take double bottoms based off week, month, and day. It just happened to match in the 4-hour time frame. Okay. Setups always off the higher time frame. Okay. Now, let's just say, hypothetically speaking, right? You had placed your stop loss in profit at this moment right here. And then eventually market come in, wick you out. Cool. You still end up getting a winning trade. Or let's just say you miss the setup itself. Again, nothing wrong with that. If you wanted more of a retracement because you understand there's a zone that's close to it. Market has a tendency to give you this type of setup. When the zone is close, it stops and sell and then it shoot right back up to go tap or touch within that zone itself. Now, this zone right here, if you readjust that zone, right? You're not doing nothing different other than matching it with the last bullish candle, which is right here. Okay. See that? The last bullish candle and then the wick high. Guess what? It still ended up being the same thing. You see what happened? It tapped it. Just like the setup on the daily time frame, it ended up giving you same kind of different type of setup with the 4-hour where it just falls semi short. Again, the mastering the bearish forest, right, covers every different variation of selling setup that the market will give you, right? Like boom, that's the first structure point, right? And when it came back, it just came back somewhat a little bit short, but the wick hit the zone itself. Now, if you are interested in learning this way, this method, right, the way that I teach, click on the link below to come and join the family. We are now accepting students, or just type in Royalty FX Academy and go ahead and come and join us. I teach 4 times a week. Okay. And at the moment, my one-on-ones are free. I do give homework every day, homework videos. All right. So I do hold you accountable. So this is how we would go, right? So go ahead and come and join the family. Okay. Of course, we have the books to back up our system. All right. So look, it came to the zone. It just give you a wick and then to continue back up. So let's go ahead and continue with this, right? So again, we took this sell. It went against us, okay? But it went first all way, and then we didn't get wicked out. Let's just say hypothetically, we got wicked out in profit. Cool, no big deal. Or let's just say we missed the sell or we was waiting for the double top itself. You got to be patient. It's okay. All right. Now look, this would have been our bearish engulfing right here. You see this bearish candle right here? Let me enlarge this. I want you guys to really see it. Okay. Okay. Sorry. Let's delete real quick. Right. See, market is within a zone. Here is the bearish engulfing right there. Okay. This is where our entry would have been. And our stop loss again, perfect at the exact previous high. Okay. We're looking at this TP because that's where it needs to be. I know it doesn't look like that much, but that's where it needs to be until otherwise. Right now, that is a bearish engulfing. Okay. Cool. But what kind of bearish engulfing that is? That is one of those bearish engulfing where it took one candle, right? That one candle engulfed the last 2 to 3 bullish candles. Again, understanding the variation of bullish engulfing and bearish engulfing price action will allow you to be very, very productive and very successful within your trading journey. So again, the ultimate price action is now available to you at Amazon. Type in Royalty FX Academy. And also, look, check me out on YouTube. Just type in Royalty FX Academy. You'll be able to watch this video on YouTube. I chopped it into at least 4 different sections where you watch them at a 14-minute interval. That way you don't have to sit there for a whole hour watching these videos, okay? And that is how I teach through my Zoom. I like to be very detailed because I focus on you guys understanding how to trade. Okay, I'm not just saying words. I will show you and interact. Again, if you are interested in learning in this kind of format where you have somebody that cares about teaching you to understand, go ahead and click on the link below or type in royaltyfxacademy.com. Come join the family. And of course, feel free to DM me. All right. And I got you. So look, stop loss at the last high, TP, smash. Okay, so it will be a bit lower, of course. I need to match it with the exact turnaround point, right? So if I go like this is the exact turnaround point. Boom, TP smash. And not just that, right? Not just that. Now we're going to identify the previous low, which was right here. We're going to identify the last selling candle. That's the turnaround point, okay? And we're going to match it with the wick of the bullish candle that goes up, right? And I'm just running it across, right? Let me put this real quick, tap that in, and we'll just go ahead and lock this in, right? You see that? So let's collapse real quick, bring this up so that we can understand structure for what it is, right? So look what we have. We got a breakout first. I'll make a video on that where market broke, right? Clean retest. We did get a bearish engulfing. It did sell. It just didn't go that far. But did it sell for us? 1,000%, right? Far enough for you to put your stop loss in profit. But look, we're looking for a retest, right? A clean retest. Now, it's really up to you how you take this retest, okay? Now, excuse me. Now, the previous high is up there. So if we're doing a fib retracement, we'll have to look at structure. The last high give us to the new low, which is actually down here, right? Now, we know our 50% or to 61% will always be at a what? It will always be at a structure point, okay? Oh, let's delete. I did it wrong. Okay, yep. Sorry. Let's drag this up real quick. Last high, right, before it fell. And I'm matching it with the low for the retracement, right? Because this would not be it, right? We'll be right here, okay? Now, if you choose to match it with this high right here because of this retracement, I'm with you. Now, what I want to show you is when I drag this across, I want you to be able to see it. Okay, let's when I drag this across and put it at the wick point, right? Let's bring it more. I don't want to be covering the screen. I want you to be able to see it, right? What do you see? A 50% retracement, y'all. Come on, now. Let's go. Let's go. Okay, see? 50%, boom, 61.8. Anything above is just icing on the cake, right? Where's our zone? Between here, wick, and turnaround point. Easy money, okay? So that's just the previous high to the new low. Now I'm going to show you a different way if you were to choose to put the fib base off here to down here. You will see that it would dip. Well, it will go within the 61%, but we're looking at previous high because that's what it did. Okay, boom. like so, to the new low, because remember, it didn't break. That's the new low. That's why the fib is from here to here. And then this is on 50, 61 exactly at a zone. And then when we got at 78%, it will always be at a structure point. So we want to look at structure point for our actual trade. Not only just that, we look at previous structure point for our stop losses. Okay. Now here it is. Now market went to a zone, right? Let's make it, we could do better than that. Market went to a zone, which is here. And then we're looking for a what? A bearish engulfing, right? At the zone, we got a 4-hour bearish candle, did not engulf the last bullish. Okay, cool, no big deal. All we got to do is just wait for the next 4 hour. Guess what? We could go to the mall, to the beach, read, cook, clean. Like, you got freedom. This is freedom, right? All you got to do is literally look at it 4 hour later, right? The next 4 hour, boom, we got a bearish engulfing. Okay. Again, it's not just any bearish engulfing. It took 2 bearish candles to engulf the last bullish candle. All right. So understanding that tells you how strong it is. Okay. Also, look, not only just that, I'm saying, well, my bad. It took 2 bearish candles to engulf the last bullish candle. I'm sorry about that. Okay. Now, understanding that, again, will help you to be very, very successful within your trading journey. This is our entry point. What are we looking for? We're looking at the previous high for our stop loss. Okay. This right here is our previous high, because that's a double top structure point, right? We put our stop loss above like so. Okay. That's what we're placing on stop loss. And then after this one right here, this, again, we're looking at structure within it. Okay. This is the next previous high. So we put the stop loss far enough, right? So we enter in within here, first stop loss, last stop loss. Okay. We put it far enough just in case if the market were to go all the way to a stop loss, it will be a full trend reversal. All right. Chances are it's not doing that. It's very, very slim. Okay. So let's go ahead and execute that real quick. Let's put our position in, which is right here. All right. Look at that. Stop loss is literally exactly at the last structure high. And this is it. This is the very last one we would use. And then this is it right here. Okay, you see that? Previous high. And then this is the wick, a little bit above it. That's it right there. Now look, we targeting TP, which is the previous low. So remember, when it comes to structure itself, right? When it comes to structure itself, right? Boom. And then boom. So we have lower low, right? And we have low high. And then a new low high. So when we take our trade at low high, targeting the next previous lower low accordingly, as you can see, TP bend smash right here. And then market broke. What did it do? It break that structure. So we can continue. All right, let's go ahead. We're going to continue with this because we want to rinse and repeat, make sure we truly understand what the market is giving us. That way we can simply read and react. Okay. So all right. So as you can see, that's what it gives us. And we look into the left for TP, which is down here. And then as market to continue to go down, it's going to go towards the next daily zone. All right.